let's see how Nigeria can monetize, its trillions, in gas reserves. Let's discuss this and other matters now, especially the Gas Masterplan. Joining me for this conversation now, we have Dr. Ayodele Oni, is a partner at Bloomfield LP. Great to have you on the show, sir. Good morning.
Thank you very much for having me.
So let's first kick off with the strategic impact. Now, how significant is the Nigeria-Morocco gas pipeline, for Nigeria's position in the African gas market, and what are the economic benefits, you can expect from cross-border energy trade?
Okay, thank you very much. First, we must realize that Nigeria does hold substantial gas reserves. We're number 9, and we do around 209. We do have around 209 trillion cubic feet of gas. And we have an upside of up to 600 trillion cubic feet. Currently we do about 7.5 billion cubic feet in production, but 60% of that is what is commercially used. 30% is for gas reinjection, and another 10% is flared, right? With programs such as the AKK and international pipelines and the gas flare commercialization program, it suggests that those programs suggest that there are opportunities for us to right some of those wrongs. And when it comes to looking at it internationally, first you need to deal with your local issues. Unintegrated gas pipeline arrangement for the Helps and the Eastern Pipeline. You then want to integrate with OBEN. You've got the OBEN 2 and conversations around the OBEN 3 and integration of all of that. And then you are able to then play a role as a regional hub and to play a role in the global market. And that's when you begin to talk about such pipelines such as the Morocco pipeline and the arrangement to move gas to North Africa and ultimately to Europe. And it improves our currency position, ensures that we can generate more forex, and would have multiplier effect. And we begin to also have industries that are gas based more, doing ammonia, doing urea, and everything else where gas is the primary raw material or primary resource. So I think it's good. The Gas Master Plan, unlike what we had before now, this is dedicated per project and it's a document. Of course, the challenge remains around pricing, particularly domestic pricing. We use a reference code system where you have a gas base price, right, that's stratified across industries from power to GBIs, gas-based industries, and exports pay almost double that. So I think that's an area that needs to be looked at again. And the master plan does actually mention that as a problem or as a challenge that needs to be dealt with for us to achieve the goals we want to achieve.
All right, so definitely looking at some of the risks and challenges to this gas pipeline between Nigeria and Morocco. What would you say are the low-hanging fruits we can get to at this point to help us hedge against some of the risks, because it's a large-scale regional gas project. What should we do, including regulatory, financing, and some of these infrastructure challenges?
It would be collaborative. We would have transit states. If you have challenges with transit states, then you don't make progress. So regionally, even as a country within Africa, we need to look at again at our foreign policies and determine how best we can work with countries around us, particularly those countries that be transit states. And it's usually a commercial conversation, right? Such that if everyone finds out that they make money, then they are happy. So we must think about it commercially, beyond what we would have done in the past. I think that's critical, our international policy. And it's good that the president has now appointed ambassadors, who would represent us in those countries. I think our foreign policy is critical. That's one. Commercial arrangement or conversations around how states get their tariffs is critical, and also ensuring that from a financing standpoint, we look at how we can collaborate with national, international organizations and agencies, that can't give concessionary funding. And we'll be looking at collateral funding with those other countries, depending on how commercially viable each country sees such a project.
Let's try and follow the money at this point, and still looking at the gas master plan. For investors, industry players, where are the most bankable opportunities right now? In that gas value chain.
I think it's midstream. There's a lot happening midstream with CNG and LPG. LPG being liquefied petroleum gas for cooking, your propane, your butane. I see a lot of that's low hanging, and the entry barrier isn't nearly as tough as what you have upstream. And with the commercial and executive orders around tax credits for non-associated gas, and what we do see as incentives, midstream and downstream gas, there are opportunities. And one thing many people fail to realize is, for example, when you bring in gas equipment into the country, there's the opportunity for you to bring that in without paying customs duty. There's that regime in place where you pay only something very minimal. I think about 5% of what you would have paid. So I see a number of CNG projects going on. You see more and more LPG plants. I think those are low hanging fruits. And you see a number of projects because of our fiscal policies, the HI project, the UBT project, a number of projects, and that have reached FID now, and conversations around FLNG with Chevron and UTM also looking at those. I think that there are opportunities across the value chain once we're able to resolve the problems or the challenges which the Gas Master Plan 2 has highlighted, and these incentives such as VAT exemption on gas equipment, the 35% investment tax allowance for gas utilization, amongst others. Once implementation isn't a problem, you begin to see more and more gas projects. Where we are today is a far cry from where we used to be historically, because of the challenges, and because for a long time we had just the Petroleum Act, which wasn't a gas law. It was more a petroleum law, or a liquid hydrocarbons law, with only, I think, one or two places where they've mentioned natural gas. Otherwise, it's strictly a law for liquid petroleum. But with the PIA now pretty much settled, and issues such as policies such as the domestic gas delivery obligation, those help move things forward, and you already are seeing projects, even the Lagos Free Trade Zone, the number of projects going on, Lekki Free Zone, the number of projects going on around ensuring that people can move away from liquid fuel and use more gas. So I think that there are opportunities across the value chain, provided that implementation of this document is well done, because that's where we struggle at times. Policy to then practical implementation usually can be a big challenge for us. And ultimately the president wants us to do around 10 billion cubic feet by 2027, and I think 12 billion cubic feet per day by year 2030. So if implementation is done the way it should be done, I think you'd see more projects come on stream.
All right, let's pivot to power supply. At this point, we keep talking about how we want Nigeria to produce more, produce more finished goods, want our manufacturing sector, to get some more action at this point. But without affordable electricity and electricity supply, that's a big bane there. The likes of countries like China, where they say production is cheaper, because electricity is actually cheaper there compared to Nigeria. So we have that gas to power initiative there. How viable is it, given the liquidity issues in the electricity markets right now?
Yeah, the power sector challenges are historical, and they've remained with us even up to now. Until recently, when NBET issued the bond, I think it's Series 1 of over 500 billion, and I think ultimately it's 4 trillion we're looking at. Gas companies were owed substantially, and other than looking at partial risk guarantee arrangements, gas companies will shut down gas pipelines. So it's been critical, because the power sector two problems: tariffing historically poor, collection being a challenge. So particularly for the grid connected power plants, there are about 26 grid connected power plants. 19 of them are gas fired, right? Thereabout are gas fired. So if they are gas fired, means they will rely on gas. If consumers do not pay, or the tariffs are lower than the cost of production, including gas, or they are historically old, then we will continue to have this challenge. Now, what a number of people have said is that they are looking at several other captive power plants or off-grid power plants that rely on gas, and in this case they are even able to better afford gas pricing. You know, what we have in the domestic market is dual. We have a dumb gas arrangement where pricing is based on a base price, you know, determined annually by the NMDPRA, I guess working with the upstream commission too. And we have a willing buyer, willing seller. And you'd have pricing from around $2.42 per MMBTU to about $3.16 per MMBTU. And then for export, is double, triple that, 6 to 8 or more dollars per MMBTU. That's for LNG, condensates, you know, all of those liquid, natural gas, liquid export projects, you know. So pricing has been a challenge. That commercial arrangement, it seems to be improving gradually, but that's still a challenge. So if the power sector cannot bear, or consumers like you and I either cannot afford or are not paying, or distribution companies cannot collect and then pay everybody else across the value chain, the power sector will continue to suffer. The only could be positive depending on how you look at it. For example, Abia State is gone almost completely off the grid. A number of companies too are going off grid. That could in itself be a positive and a negative, right? You get off, cannibalize the grid, and you get a lot of people off it. May mean that is there sufficient for the poorest but the least privileged people. But pricing can then be a challenge, because remember, power is on an economics of scale, right? So, you know, the power conundrum needs to be resolved one way or the other. With states maybe taking over, you will see some progress, but it may be stratified across the states. So work is being done around infrastructure, metering, and we hope we do see the result. If we see the result and pricing is more reasonable, collection, aggregate technical, commercial, and collection losses reduce, then the power sector is able to better bear gas pricing, then it's even also good for what we want to do under the Gas Masterplan, because the power sector and gas pricing remain a challenge.
All right, Dr. Oni, but before I let you go, you know, very quickly now, you know, with all this attention, you know, gas is getting right now, and all these ambitious, you know, plans right now with the Gas Master Plan, do you see, you know, if we, you know, do it right, do you see gas overtaking oil in revenue contribution within the next decade?
Yes, I do see that. And you can take a good example from Qatar. Recall Qatar pulled out of OPEC once it could run its economy with gas. So, you know, I think the number 3 or 5, and production is around number 6 or 8, you know, between themselves and Saudi Arabia. So they're doing really well. So we could always borrow from elsewhere where they've succeeded. And I think in this case, Qatar is a good example, and even Saudi Arabia. I think that we can have a gas-driven economic growth in the next decade or so, which would not only be also local value addition.
All right, fantastic. Let's see how that plays out. Thank you so much, Dr. Ayodele Oni. He's a partner at Bloomfield Law Practice. Thank you for coming on the show today.
Thank you very much.